At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Hi, ladies and gentlemen, and welcome back to the Passive Cash Flow Podcast. Hopefully you've been enjoying a number of our episodes here. We come out with a new episode every single week, and today's episode is about how to identify the best real estate syndication companies. See, here at People's Capital Group, we are a real estate syndication company, but this is a very popular industry right now. Years ago, it wasn't as popular, but since the Jobs Act, which I'll touch on in this podcast, a lot more syndications have come to light. So we're going to talk about how to select the best one, how to, for your investment goals, and how to identify the differences between real estate syndications here on the Passive Cash Flow Podcast. So thanks again for subscribing here. Make sure you hit that subscription button. If you're not yet subscribed, make sure you like the video as well. If you're on YouTube, if you're on Spotify or Apple iTunes, give us a review. We'd love to hear from you. Also, give us ideas for new topics and guests. We're always looking to expand our podcast and build our brand as well. So let's break into the topic today, how to identify the best real estate syndication companies. So first of all, we have to understand that not all real estate syndication companies are created equal. There are many differences between them, and many of them make a huge difference. Some of them are just more preference. First of all, what is a real estate syndication company? So a real estate syndication company, of course, pools capital together and buys real estate. It could be all different types of property, apartment buildings, which we focus on, but you could do this with warehouses or office space or retail, land, new construction, right? Essentially any capital you need to develop or maintain or purchase and manage real estate is generally pooled together through a real estate syndication company. And they're responsible for a number of things, okay? And so first of all, finding and vetting the real estate investment prospects, right? Raising capital for the property, right? Our investors get invested into a multi-million-dollar apartment building for about $30,000. So normally $30,000 wouldn't get you a multi-million-dollar apartment building, of course. You need a lot more than that. But by pooling capital together with other real estate investors, people can take part in a real estate syndication and build their wealth exponentially. Now, also, you want to what we do here at People's Capital Group and real estate syndications in general is ensure that you're operating effectively, so that we're getting the building renovated, managing it to a T, and making sure it's built using cash flow and value for our investors. But to break down the responsibilities of a real estate syndication company, here they are. So of course we want to locate the investment opportunity via networking or marketing. A lot of times we'll find off-market opportunities, pocket listings through brokers, or direct mail. Through direct mail, we'll get in direct contact with the landlord. So we'll find an off-market opportunity, right? So a good real estate syndicator, their first job is to find a great deal, right? Secondly, handle the negotiations of purchasing the real estate. I always say great deals are created, they're not found. That means building a relationship with an owner and getting to know them well and understanding their needs and negotiating a good price on their real estate is how we create deals as well. Then, of course, we create the business and investment strategies to support the syndication deal, raise additional capital, have the management in place to take down the property in the right way. Handle the paperwork necessary to make the syndication lawful with the SEC. Make sure we're SEC compliant. Okay, we operate a 506B here at People's Capital Group. That means we accept sophisticated, non-accredited investors and also accredited investors. But that also means I have to have a telephone call with everyone who invests before they start investing with us for the first time. So it's called a discovery call. And that's part of operating a 506B. We also exercise due diligence, including the title work, financial audits, physical inspections of the property. And then we'll gather funds from limited partners, okay, LPs, limited partners, also known as passive investors. And these people will bring the capital into the opportunity. We work with anywhere from 1 to 30 people per investment, sometimes even more than that, depending on the size of the fundraise. Then, of course, once we purchase the property, we're going to manage the property, hire property managers. In our case, we don't hire outside property management. We have in-house property management. That allows us to have a little tighter control of the asset and manage it more closely, but it does limit the locations we can buy comfortably. But once you buy the property, of course, the syndication company is responsible for overseeing that management, making sure the project's going according to plan, and that the property is producing the targeted returns the syndicators initially told you they were going to produce for their passive investors. Then once the building's operating and producing cash flow, the operators, the real estate syndication company, is going to be responsible for distributing that revenue to the limited partners. That might come in the form of positive cash flow, which is distributed quarterly in our case, or possibly a big lump sum upon the refinance of a building, which we prefer to do. Harvest the equity growth through a refinance of the property. And that's a great tax-free strategy to pay yourself and your investors, and that's what we focus on here. You can also sell the property as well. That's another way to distribute revenue to the investors. So that's what a real estate syndication company does. And now let's talk about how to find a real estate syndication company for your needs, right? Because everyone has different investment goals. Some people are at different times of their life, right? So your investment goals and your investment strategy will differ depending on your age, your amount of wealth, your experience, how many children you have, right? People you're expecting dependents you have to take care of in the future, the age of your children, right? So these are all going to play factors on your investment strategy. And of course, there's no right or wrong strategy for everyone. It's really a particular way you want to build your wealth. And that's part of our discovery call when we connect as we talk about your investment goals. But here's some of the best ways to find good real estate syndication companies. Networking. For example, I'm speaking at Diversified Investment Group in Eastern PA tomorrow night. I speak at different real estate investment groups all over this tri-state area. I've spoke nationally as well. So that's a great place to meet syndicators such as myself. You'll meet people that are moving and shaking out there, speaking, showing up to events, hitting the pavement. That's a great way to build your network in general, meet contractors, brokers, but also real estate syndicators that are going to help you put your capital to work passively in real estate, that have a good track record, know what they're doing. They're going to be speaking at these events, okay? And that's how you're going to meet a lot of good real estate syndicators, through networking. Good place to find networking groups, meetup.com. We have a meetup group of over 4,000 people called New Jersey Real Estate Network. So if you haven't connected with us on meetup.com, that's how I started my real estate syndication, actually through that RIA. So it's been a great blessing for our members and us as well here at People's Capital Group, and a great way to connect with people and get to know them on a personal level as well, face to face, which is really important when you're doing business and investing your hard-earned capital. So online, okay, so now online sites, of course, we do all of our shopping online, right? The first place you go when you're looking for something is Google. So we put a lot of money into our website. If you haven't checked out our website, peoplescapitalgroup.com, check it out. We have tons of content there, but it's so important when you're shopping online to know who you're dealing with. Of course, it's not that hard to make a good website and get some Google reviews. You want to make sure, of course, they have more than a good website, but everyone has a website these days, right? That's everyone's storefront. So just a simple Google search, going online will give you tons of options, different real estate syndications out there. Of course, make sure you find one that's a good fit for you as far as the returns you're looking to earn, the timeline you're looking to invest your capital, and the areas and structures you like to produce comfortable returns through the years so that you don't lose sleep at night. And of course, a lot of that's dependent on the operators. You want people you're comfortable with, that have a good track record, that seem fun to do business with, and transparent as well, right? And then the third option here to find good real estate syndicators is recommendations, okay? A big source of our new investors are found through referrals, right? People saying, hey, People's Capital Group just returned 2 times what they initially told us I would earn on their investment. That's phenomenal. We just did that on investment. We told our investors we'd earned about a 12% annualized cash-on-cash return, and we actually produced about 2 times that to our investors in about a 2-year period. So really a phenomenal experience. And what happens when your investors or people in your network experience good business and overperformance on the investments, they recommend people to you. So a lot of our investors recommend, refer people to us, and that's a great compliment to us. We love referrals. any business owner you are, whether you're selling a widget or you're a broker or whatever your business is, if referrals are so important, right? Even if you're working in the sales industry or whatever industry you're working for and in, referrals are so important, right? Warm business. So you always want to talk, hey, you're doing well, you invest in real estate syndications, right? What operators do you prefer? What real estate syndicators do you prefer? And how do you find them, right? So that's how we find good real estate syndicators. Now let's talk about how to find the best real estate syndication deals. Okay, so we have operators, real estate syndicators that are operators, and they're going to bring in particular deals to their group. Now, you generally have to be qualified and on their investor list to review these deals like we do here at People's Capital Group. You want to do that discovery call and get qualified with me before you're on our investors list. But once you're on that list, you're going to be able to review deals. Okay, so you've gone out, you've met syndicators, whether online or networking, you've signed up on their list, you got approved, and now you're reviewing deals in your inbox. So how do you determine the best deals to invest in, right? Most of us don't have an endless tree of money in our backyard, so we have to kind of pick and choose what deals we're going to invest in, because quite frankly, you can't invest in all of them. So, and you shouldn't, right? You want to invest in a particular type of deal, particular strategy, right? Maybe a diversification of different deals, different operators. But it's important to understand the syndication structure, right? What type of structure is that syndicator executing? See, we focus on a long-term structure where our investors can build legacy wealth. That means they don't have to be bought out at any time. They have multiple exit options along the way, but we encourage them to stay invested long-term, keep earning quarterly cash flow checks and large lump sums upon the refinance, and that allows them to build legacy wealth over time and continue to earn on that initial principal investment. We don't force them out at any time. We don't sell the property for short at any time or anything like that. We refinance and trade into bigger properties over time through a 1031 tax deference. So we help our investors build legacy wealth, never-ending wealth that's always creating more and more capital in your mailbox. So that's what we focus on. Now, other syndicates are going to say, hey, we're going to buy a building, we're going to renovate it, we're going to lease it up for top dollar, and we're going to sell it for as much of a profit, as much as we can make, as fast as we can. That can also be a great strategy. You could do a very profitable investment that way. However, you're going to have taxes, and of course, you lose your investment machine, your cash flow machine, and your tax write-off machine, and your equity growth machine. You lose your property when you sell it. So we prefer to hold on to properties for a longer period of time. So we have a very long-term view of real estate, although our investors have multiple exit options along the way. But we invest for a tax strategy. So it's a bit of a maturity investment. That's what we focus on. Other real estate syndications may focus on cash flow, right? And then, so you also have real estate syndications that focus on equity growth, like we do. Now, of course, our investors earn cash flow and equity growth, but the bottom line is we try to produce as much revenue for our investors, but there is a timeline to invest, and it is a longer-term investment. So you want to make sure your investment goals align with the operator you select. And quite frankly, whenever you're investing, having a long-term strategy is generally the best strategy. Taxes, fees, and other costs. So let's talk about the fees you might run into, understanding what is likely going to be charged and fair to be charged by a syndicator, and what might be over the line. So property acquisition, okay, most real estate syndicators charge an acquisition fee. That's generally 1% to 3% of the purchase price of the property. We do that here at People's Capital Group. It's a very common fee you'll see. Asset management, we don't actually charge an assets under management fee here, an asset management fee, although that might be something we start doing in the future at People's Capital Group. Most real estate syndications charge an asset management fee. It's very, very common. Doesn't mean they're bad or good. It just means that's a fee that's going to be in there, and keep an eye out for that, picking out of your profits possibly. Construction management, okay, that could be a fee based on the amount of the construction project, generally anywhere between 3 to 5%, sometimes up to 10% of the project, depending on the size of it, the scope of work, and the responsibilities of the construction manager. And of course, we don't charge that here at People's Capital Group, but you might want to keep an eye out for a fee like that. That tends to be more common in development or heavy renovation projects. Disposition. Okay, this is maybe when you're selling the property here, there'll be a disposition fee by the syndicator. We do not charge this, but this can be a common fee you'll see. And again, it's kind of a performance based. It would have to be based on how much they sell the property for, ideally, to get paid that fee. Loan guarantee. Okay, this is a fee for the syndicator to sign the loan guarantee and personally guarantee the loan. Seth and I, if we have to personally guarantee the loan, we do regardless. We don't charge a loan guarantee fee, but that is a fee you'll see out there from syndicators. And then a refinance fee. Okay, that's a fee, of course, to refinance the property successfully and harvest that equity growth, which is what we focus on doing here at People's Capital Group. We don't charge a refinance fee. We do make profit when we do a cash out refinance successfully through our equity ownership. So we get paid when our investors get paid, and that's a nice win-win structure for us here at People's Capital Group. We're really not a fee-based syndicate. Other syndicates are going to be more fee-based and perhaps give away more equity. So you want to make sure you select the right syndication for your investment goals. A note on fees: I wouldn't focus too much on fees. Some obviously don't all. If they're charging all those fees, that's a red flag. But if, some fees are necessary to run a good business, and I wouldn't say no to a syndicate just because they're charging some fees. I'd focus on the returns you're going to earn with the investment. That's the bottom line. So let's talk about the transition to online real estate syndications. Okay, just in the last few years, we've seen a complete change in how you can solicit and raise capital publicly and privately. So in 2012, the Jobs Act provided enormous opportunities to qualified investors, and now non-accredited investors can invest in certain real estate syndications. Now, most real estate syndications do not accept non-accredited, sophisticated investors. We actually do here at People's Capital Group. That means you don't have to be a millionaire to invest with us. You do have to have some investment experience, understand the investment opportunity, have the means to not need to survive on the returns of the investment, have ample savings and income. But for the most part, most people qualify as sophisticated investor that are serious about real estate investing, and that opens up the door to a lot more people to invest. So we're People's Capital Group here, and we help people invest in real estate. But you can find opportunities on Facebook, LinkedIn, all over the internet these days, social media. So now it is legal to market and advertise for funds in different ways. Different funds have different rules, but you'll find them out there. Because of the Jobs Act, now there's more opportunities than ever to invest in real estate syndications. And investors have more options than ever, quite frankly, as well. So here's some final words on how to evaluate a real estate syndication company. Okay, their experience level and years they have managed and underwritten and syndicated deals. Okay, the number of deals they've successfully closed and the kinds of transactions they handled. Also, how many deals have they taken full scale, right, from purchase, renovation to refinance, and how have those deals performed? That's a great question to ask. How much profit do you stand to make from investing with them, right? What's your real net profit, take into account your tax benefits and everything else. If they say, hey, we're going to buy, renovate, and sell the property, you're going to double your money in 5 years, that could be great, but keep in mind, what are the tax consequences of that strategy, right? What's your true internal return on investment? Okay. Also, what's a lousy investment you're going to look like? What happens if the market drops out? What happens if we hit a recession, right? Those questions need to be answered by the operators so they have stress tested the property and they can prove that to you and talk confidently about it. And finally, a team of real estate experts will be involved in the deal, right? A good team. So what's the team you work with? Do you work with a third-party management company? Who do you work with on the due diligence and underwriting? Who you're going to work with long-term on the service providers and managing the property? So we have an in-house management company here at People's Capital Group because we recognized the importance of property management and that at the end of the day, you could do well on different types of real estate, warehouses, apartment buildings, office space. You could do well in different markets, the Carolinas, New Jersey, California, Texas, very popular. You could do well with many different operators. There's big names out there, there's nationwide names, there's smaller guys like us. So there's tons of different opportunities out there to invest. There's big websites, there's middlemen in those, and different ways to find different opportunities. But the bottom line is you want to find someone that has a good team in place, a good structure in place, and a strategy that meets your investment goals, right? Length of investment, return on investment. And don't go with the biggest guy or the highest return always. That might not always be the right fit for you. Sometimes a smaller group that's a little more personal and can give you a personal touch and quick feedback and actually get in touch with the owners of the company. There's benefits to that as well. There's benefits to investing with large corporate groups as well, raising billions of dollars. So there's different experiences in both of those. The bottom line is you want to make sure the team has a good infrastructure in place, they have a good track record, and you align with them as far as your investment goals and your way of doing business. So if you want to learn more about how we help people invest in real estate, go to peoplescapitalgroup.com. Enjoy our content there. We have over 100 podcast episodes, blogs, and tons of information on our website there. Webinars we put out almost every other week as well. And then when you're ready, click register to invest, schedule a discovery call with me, AaronFragnito, and let's connect. Let's learn about your investment goals, and let's see if they align. Thanks a lot. Have a good day.